joining us for the official open of S-Boss. Just about cutting a ribbon. It's about cutting through barriers and creating opportunities for entrepreneurs and small business owners.
Hey, my name is here.
I too am a small business owner, so I understand those challenges. And when we were built on the belief,
entrepreneur, and I was poured into tonight. It was great.
Every great idea deserves a chance to grow, and every dream deserves a resource. So rather than scaling up, simply exploring an idea, a concept, this center is
and our businesses. And I'm glad to be a part of
this center is here to support you.
Great night of information.
We designed this space to be a hub of innovation.
And just being
we were very
like-minded people, have
careful in the
confidence,
design.
and I'm ready to get started.
It to
Let's
feel
go.
welcoming. But more than welcome, what's feel innovative? We know that colors matter, signs, things that help you get inspired. So S-Boss is a key component of Mayor Stephen Reed's vision to create a thriving ecosystem for small businesses. The American Rescue Act, as we call it, ARPA, they help do this. This is the funding that we received to make this happen. The establishment of the Small Business One-Stop Shop demonstrates that this is ready for growth. They are putting the money behind the engine. I just want to thank you all for joining us.
Okay, my name is Shantae Gray. I am here at the S-Boss Set It Off Mixer. I am an entrepreneur, and I was poured into tonight. It was great being in the room with fellow entrepreneurs. We're ready to get structured, organized, and turn 2026 out with our brand and our businesses. And I'm glad to be a part of this. It was a great night of information and meeting some great people, and just being in the room with like-minded people helped me gain my confidence, and I'm ready to get started. Let's go.
My name is Barbara Clark with Sweet Homes, and I came to the S-Boss Set It Off Mixer tonight. It was a great session. Learned a lot of things, especially about setting our goals for the year and learning what our strengths and weaknesses were from the past year. So it was a great time, great event, and always informative.
I just want to thank you all for joining us for the official open of S-Boss. Today is not just about cutting a ribbon. It's about cutting through barriers and creating opportunities for business owners in our community. I too am a small business owner, so I understand those challenges. And when we had RFP, I think 90% of our team were small business owners. And so S-Boss was built on the belief that every great idea deserves a chance to grow, and every dream deserves a resource. So your business, scaling up, simply exploring an idea, a concept, this center is here to guide you. This center is here to support you. We designed this space to be a hub of innovation. We were very careful in the design. We wanted it to feel welcoming, but more than welcome, we want it to feel innovative. We know that colors matter. Those are things that help you get inspired. So SBOSS is a key component of Mayor Stephen Reed's vision to create a thriving ecosystem for small businesses. The American Rescue Act funds, as we call it, ARPA, they help do this. This is the funding that we receive to make this happen. The establishment of the Small Business One-Stop Shop demonstrates that this city and this county is ready for growth. They are putting the money behind the engine.
On Facebook, YouTube, or Instagram. Again, we thank you for joining us. And if you have any questions or comments, feel free to drop them in the chat, and we'll try to get through them as quickly as we can if we have time. Again, welcome to SBOSS, the small business one-stop shop here at Montgomery, Alabama. I'm Kenneth Penn. I'm a CPA, and I have worked with several businesses in the past and currently on getting them ready for loans or loan readiness. And so a lot of this conversation is going to probably center around mostly startups and businesses in the age of 3 to 5 years. So again, we're here live streaming, and the video will be available after that, after we're done. So you'll be able to log into our hub and be able to watch it again, or tell some friends or people you know that are starting businesses or own businesses to log in as well. So what we're going to do here, we're going to kind of start with talking about the landscape of lending or banks. There are several types of banks or several types of lending facilities. You have your traditional banks that you probably already know about, that you probably have your savings or your checking accounts with. You also have the SBA loans that can be done through those same banks, as well as other types of lenders. You have the alternative lenders like your online lenders, LendingTree or whatever, and I'm not vouching for them. I'm not trying to I just threw that out there. Credit unions, and also your CDFIs, which are some of your community development financial institutions that really work with small businesses as well in the community. Then you have your microloans, which again, SBA has those express loans or low doc loans that they're doing now. But I'm sure you guys have probably heard about the 5 C's of credit. And that's one of the things where you kind of start with. One is your character. You know, what's your track record? What have you done in the past? Have you borrowed before and paid it off? What's your capacity for this particular loan? Can you repay the loan that you're applying for? Capital. What is your investment in that business? If you have no investment, the capital, then that could be a slight ding on that. Also, you have your collateral. What assets do you have? Whether it be real estate, whether it be equipment, vehicles, anything like that. And also what they want to consider also are the conditions. What are the conditions? What's the market like? What are the interest rates? Is your industry in decline? So they look at those type of things as well. So understanding those and where you are inside of those 5 C's will be very important and crucial when you're preparing for the loan. So, but understand that all of these types of lenders, even within the same category, banks have each bank has its own different lending requirement. It may be a credit requirement hurdle that you have to get over, or it may be that we don't loan to businesses in that particular industry. So understanding what those banks are and what they lend to or how they lend will be very, very, very important. The credit score, we'll kind of start on that a little bit. Again, they have different requirements. Some of them can usually around 620, 640, 650, something like that. But then you also have those that, in the CDFIs, that might go a little bit lower and be a little more flexible in that approach. But understand your personal credit is very, very important as a small business owner. Because as a small business owner, typically you are the business. So you have to ensure that your personal credit is on point. before you can before you apply for a loan through your business. And then to improve your credit, I mean, I'm sure you guys have all heard this, obviously pay down your debt or your credit cards. And when you do that, don't close their accounts. Just kind of let them stay open. And again, pay them down. 30% is a good rule of thumb, utilization. So if you have a, $1,000, credit card, pay it down to $300. And even lower could be better, but usually that's kind of like the sweet spot that they're looking for. If you have any errors on those reports, go ahead and dispute those and get those taken care of. And when you're applying for the loan, try not to basically have any inquiries on that prior to applying for the loan. Now we're going to move to the business. And I know a lot of times people say, well, I don't want to apply personally, I want to apply for the business. But again, as I said before, you are the business most times when you're a small business owner. So, but moving to the business, some of the things that you would need to have or want to have for that particular banker to take a look at or to understand just for yourself will be financial statements. Financial statements are very, very crucial. And within those, you have what's called the profit and loss statement or an income statement. That's basically telling us, telling those bankers, are you making any money? What are your revenues? What are your expenses? So they see that. They see whether or not you have profit. Another one of the financial statements is the balance sheet. And basically the balance sheet basically shows bankers, what do you own versus what do you owe? So if you bought equipment for $10,000 and you still owe $5,000 on it, it lets the banker know that you have $5,000 worth of quote unquote equity inside of that particular business. And most of the times those are really, really important for capital intensive type businesses that require equipment, have vehicles, have land, things of that nature. Most professional services businesses like tax prep offices or attorneys, a lot of times don't have a lot of assets. They make revenue, and so it's not going to be as crucial when you're taking a look at it from that standpoint as that type of business. And also they look at cash flows, cash flow statement, or just simply looking at your bank statement to see your cash coming in and how it's going out. Some of the things the numbers that they really look at on those particular statements will be revenues, as I mentioned before. Is the business growing? Do you have sales? Are they stable? Have they been stable for years? Or are you now in decline? And so also they look at profit margins. Are they increasing? Again, decreasing? Just simply, are you profitable in the business? Debt to income ratio. How much debt do you have versus the income? That lets them know whether or not you can handle any more debt. And then cushion, cash reserve. Do you have any cash? Are you basically living hand to mouth every week? You basically going to zero? That is something that they'll want to know. Some of the documents to pull together would be your business tax returns, business and personal tax returns, at least for the last couple of years. Those are crucial to see what you reported versus what you have in the financial statement. Just point blank, sometimes there may be some gap between what's going on in the P&L versus what's been reported to the IRS, for instance. The bank statements, as I mentioned before, that way they can take a look at, are you really bringing in the cash that you save? Does that cash match the revenues when you're bringing it in? So they'll see that. Your business licenses, registrations, any professional credentials that you require for your industry, they'll want to take a look at those, as well as your articles. How are you structured? LLC, Inc., or sole proprietorship. Obviously, your EIN number, business plan. With the business plan, don't just go and just throw something on a piece of paper and say, hey, this is my business plan. Really think about your business plan and what you're planning on doing, what you've done in the past versus what you're doing currently. Be very realistic about it. Don't just throw on, I'm going to make $1 gazillion, next year. Be realistic about your forecast or your projections. If you have any collateral that you're going to utilize or use for the loan, show proof of that or proof of ownership of that. If it's if it's a truck, just basically show that you own the truck and it's in your name, in the business name, and basically show that you own it. And if there are any liens on it, if you still owe, have a note on that particular vehicle. So another thing they want to take a look at, and we've had these conversations with bankers, is time in business. Startups have a more difficult time in applying for loans. So you have to be aware of that. So most of the time they want to see at least 2 years in business. What that does is let them know that, hey, this is not a fluke. This is not something you're just kind of throwing up there that, hey, I'm starting a business, I need $10,000. So they like to see that. The newer businesses, however, you do have some options, and it may be some things, for instance, with some of the alternative lenders and also with the CDFIs or credit unions, that you could basically knock on their door and say, hey, I have a new business, this is what I need. If you're buying a restaurant or you're doing a franchise or whatever, that has a track history, even though you're new, SBA could be an option for you in that. But you want to be strategic about it. You want to basically think about what you need, have those documents in place. Basically, I mean, everybody's heard the thing, if you stay ready, you don't have to get ready. So go ahead and get those documents in place prior to, and those other things in order prior to applying. Because when you're applying, a lot of times you want to run or you need that money right now. And it's not a very, very quick process most times. Some of the mistakes, we'll talk about that a little bit. Applying too early. As I mentioned before, startups, things of that nature, you have a huge hurdle to get over in order to be successful in applying for a loan. So a lot of times you start too early by not meeting the minimum requirements of the 5 Cs. You don't have all your documents in order. You haven't been in business for at least a minimum of 2 years. So you haven't do that. So what I would suggest on that is just do a self-assessment. Look and see where you are. Take a look at your credit. Take a look at your capacity to pay. Hey, is it the right time? Is this business successful, or is it something that I'm really going to do? So you want to take a look at that. Some other things too, which I see as a CPA, are poor financial records. Your bookkeeping is not in order. You're basically using your bank statement or your checkbook as your accounting, your P&L or your financial statement. So make sure you keep that in order. Time and bring that. If you don't have the ability to do it, so you have to be aware of that. Then just look at most of the time engaging a bookkeeper or logging on and getting there are some free apps out there to prepare your accounting and your bookkeeping. So you want to get that done. Your cash transactions. I know a lot of people work with just strictly cash in some businesses, but you got to find a way to track those transactions to show the banker that I am making money. The other thing too is a weak or non-existent business plan. As I mentioned before, your business plan has to be about your business, not just a business in the industry. So if you have a restaurant, I mean, some restaurants are different. Yours is going to be unique. So make the business plan about your restaurant and be detailed, but not have a ton of 40 to 50 pages. No one's going to really want to read that. So just go ahead and do a business plan and update that business plan, every 6 months or so, because things do change and they change a lot faster nowadays. So in that business plan, if you're getting the loan, you definitely want to explain to how you're going to repay and how this loan is going to help your business grow or be able to sustain the business. So, but in that, so make sure you place that in there and what you're going to, the use of proceeds and how you're going to use that money and how you're going to pay that back to the bank. Another thing that I've seen, which sounds kind of weird, is basically underestimating how much money you're going to need. So sometimes you would basically, I've seen where businesses have borrowed not enough money. And basically all you do is take that money and it doesn't assist your business or help it grow and create value for you. So now you basically got another loan and you're still in the same place. So now you have additional cash flow going out. So make sure you understand what it is that you need the money for and throw a 10, 20% cushion on top of it. Because as inevitably something is going to happen that you didn't plan for. So you want to make sure you have that cushion to be able to sustain the business and make sure you understand what that money is going to do to grow your business. Applying for a loan is kind of like dating, I guess. You get one no, don't just stop there. So check on other banks to figure out what it is that they offer and apply at different banks. If you apply at one and you get denied, find out why you were denied. So just basically getting a no and walking out and going to the next bank, there's something that you could probably easily fix that you forget about or that you don't know about. So knowing and knowledge of why your loan was denied is very, very important. Things that the lenders look for, inconsistencies, as I mentioned before, gaps or differences between your P&L versus your tax return. So they take a look at that's a red flag. Large withdrawals or large deposits into your bank account are red flags because some of those deposits could be, not sales. They're actually a loan from your parents or something that you threw into your bank account to help sustain you. So you want to make sure you understand what those transactions are inside of your bank statement. any challenges with bankruptcies or liens and those type of things, you definitely want to disclose them, but that's a red flag to bankers as well. The high debt-to-income ratio, as we mentioned earlier. And again, if you don't know anything about the industry that you're going into, so if I'm a CPA and all of a sudden I want to basically start, basically doing cement, they would look at me and think, hey, you don't understand this business well enough. So get the experience in the business first of something that you're looking at doing, at least in some form or fashion, before you make that application. So, but all in all, most of the denials can be prevented with preparation. Again, you don't have to get ready if you stay ready. Kind of threw something together here, it's a 90-day prep plan to get ready. So first month, assessment. Look and see where you are. Take a look at your credit reports, pull your financial documents and see if there are some deficiencies there in terms of how it looks and if there's some errors in there. Organize the bookkeeping as well. Separate your business and personal finances. So if you're doing transactions through your business account that are personal, find a way, separate those, do different bank accounts, and basically do a draw or a distribution out of that business account into your personal and pay your personal bills through that. That's one of the things that a lot of times make these applications take a long time in order to get them done. And determine how much you're really going to need. Determine exactly how much you're going to need when you're doing the application, because just having and say, hey, look, give me $50,000 and you have no idea why you're going to use it, that usually doesn't work for bankers. Strengthen your profile. Again, the 5 C's, I'm sorry. Pay down your credit card, build up your cash, create that business plan, and do some research. Find out what lenders are out there and which one would fit with what you're trying to do. If you're doing a lot of government work, look at getting your DUNS number and registering with sam.gov, because you're going to be required to do that with them. Some of your pre-application type of processes would be talking with advisors, talk with your banker. You would want to know the bank or have a relationship with the bank that you're applying for. So start talking with the banker, see what it looks like. SBDC is another free service that you can take a look at. That's out here, especially in the Montgomery area, we have one here. So take a look and see where some deficiencies are and ask them, hey, how can I improve my application potential in this particular case? Build your narrative. Be able to discuss with a banker why you need this loan, how much you need, and how you're going to repay it. So again, I mentioned SBDC. You have your local CDFIs that could potentially help, and also here at SBOSS, we can kind of help get you ready for the loans and things like that. We don't have loans, but we can kind of work on that. Have the documents in digital format. That is really, really crucial to having. Allowing us to work with you a lot easier. Be ready to explain those red flags. If there are some deficiencies, be ready to explain those, and be honest about it, because they're going to see it, or they're going to find out, and they would need to know what those are. And patience. You've got to be patient. These loans could take 30 to 90 days. There are some that can fast track, but they can fast track only if you have everything ready to go. So, with all of that being said, I'm going to go back to the thing I said before. Stay ready. Be ready to, even if you're not looking for a loan right now, go ahead and prepare those documents. And just having them just to prepare your bookkeeping and have your accounting in place for tax prep purposes. So be ready for that. Preparing for a loan is a process. It's not just a one-day event. So you have to give yourself time to do that. So again, have your documentation in place, check on your credit, use resources like SBOSS, and hey, let's position your business for success so that you can get that loan. If you have any questions, feel free to drop them in the chat. We'll try to respond to them within this time. No? Okay, again, I want to thank you guys for joining us. If you have any questions in the future, feel free to reach out to SBOSS at our website. We also have a hub set up so you can join. You can basically join and become part of the team here at the community here at SBOSS. And on that, we will have several different resources in there. And we're also going to have a loan document or a loan readiness checklist that will be there. So log in to our website and check us out. Again, thank you for joining us. Enjoy the rest of your day.
Montgomery. My name is Martavis. I am the marketing and communications lead for the Small Business One-Stop Shop.
And I'm Trish Jordan. I'm the project coordinator for S-Boss.
We just left the incredible Small Business Mixer Set It Off edition. Here Nicole and Kenn, they dropped some amazing gems for us today. What do you think about it?
Yes, they did. The key takeaway that I got from tonight is not all customers are your customers. I work here at S-Boss, but I am also a small business owner as well, and that was a good point that I really need to hear tonight.
Awesome, awesome. On top of that, we dropped some amazing events that we got coming up. Next up, we got
on February the 4th, we have Strong Coffee, Strong Women. Tell your mom, tell your friends, come on out here and join us for Strong Coffee, Strong Women on February the 4th.
Now, we keep talking about strong coffee, strong women, but let me tell you guys, fellas, your time is here to shine. On February the 28th, we got Business, Beers, and Bourbon. Round number 2. Same space, same time. We'll meet you there. Announcements and more information coming soon.
And don't just stop there. If you just need to come in for your small business to have a one-on-one with me or Martavius, make sure you join us at
www.sbossmgm.com.